have discussed. Before going to start today's session, I'm just going to remind what we have discussed in the earlier session. So we have discussed about, so if you see here, so the asset accounting, so basically the requirement of the fixed asset accounting, it will have the, so first we need to understand the capital expenditure. Insert here, from here the asset accounting is going to start. Okay. So for asset accounting, there is a capital expenditure and a revenue expenditure. It is there. Okay. So the difference between, what would be the difference between capital expenditure and revenue expenditure, I have explained in detail. So this is only for your information. No one will ask you during the interview. Okay. Because the reason being that why why we need to calculate depreciation on the fixed assets. So that is the reason I have explained about capital expenditure and revenue expenditure and what is the difference between. Okay. So requirements for the fixed assets. Okay. There will be different kind of requirements will be there. One is a local requirement. Another one is a country specific requirements. Okay. So that local requirements in India, we have to follow the depreciation calculations based on our local government rules and regulations. Okay, that we are going to say as a accounting principles. Okay, so the country specific requirements, if there are any country specific requirements, then we have to follow that requirements. Okay, so then I'm just moving to the today's session. Okay, this and all I have already explained. Then coming back today's session, depreciation area. So what is meant by the depreciation? So first we need to understand the chart of depreciation. I have already explained in detail. Even I have shown in the system also what is meant by chart of depreciation and how the chart of depreciation is interlinked to the country level. This I have already explained in detail. Depreciation area. Okay. So now the coming back to the depreciation area is nothing but now I want to calculate depreciation in India. We must have to, just a moment. So in India, let's say I want to calculate depreciation based on the Income Tax Act and based on my Companies Act. Okay, where you are going to calculate depreciation at Companies Act, that we are going to call it as a book depreciation area. Okay, so the book depreciation area, the system will post accounting entries to the book depreciation. So meaning that the book depreciation area 01, whatever it is there, this is going to post the accounting entries. Then the tax depreciation and group depreciation, that is what we are going to call the book depreciation area as a real-time depreciation area. But the other depreciation areas are delta postings only. So only the information postings. Remember, this concept, as I have explained, the book depreciation area is the real-time depreciation in ECC. But in S4HANA, this is the only real-time depreciation area in ECC 6.0. But in S4HANA, all depreciation areas are real-time postings only. So meaning that all depreciation areas related entries will get posted to the GL accounts. Okay, so this has been changed, but we will talk more about during when we will be there into the S4HANA sessions. Then the next one would be depreciation methods. What are the depreciation methods we are having and what we are following? So there are, if I want to calculate a depreciation, there are two depreciation methods are there. One is a straight line method, another one is a written down value method. Hope you have already, if you remember correctly, let me explain once again. Okay, so there is a lot of difference between straight line method and written down value method. Let me give you a small example here. So if we talk about the straight line method, let's say I have my asset value is a 1 lakh rupees. SLM straight line method where I am talking about this one. Then I have an asset value is a 10 lakhs rupees. If I follow depreciation is a 10%. Let's say my depreciation would be 10% per yearly, 10% per annum, 10% per year. Then 10% I'll give here. Then what will happen here? So let's say my asset validity period, asset lifetime of the asset, let's say 10%, 10 years, 10 years, what I have given here. So so here what will happen? Let's say for 2023, 2023 and 24 financial year, the depreciation which I want to calculate, let's say the asset purchased on 1st of January. Okay, I'll put it that one also so that it will be easy. Asset purchased on 01st Jan. Then what will happen here? Okay, this I'll remove this one. Asset purchased on 1st of January. Then, so if I want to calculate depreciation or 1st of January, I'll put it as instead of 1st, then April 1st. 1st of April, so that it will be it will match for our financial year. So let's say if I want to calculate depreciation for 2023 and 24 financial year, 10% on this purchased value. So let's say 10% means then what will happen? 10 lakhs into 10%. So it's a 10,000 rupees. So after reduction of the 10,000 from this value, what would be my net book value? NBV, net book value. So 1 lakh minus 10,000 rupees. This is my net book value. This value will be carried forwarded or will show in my books of accounts. This asset value has been reduced. Then my present value is a 90,000 only. Even after reduction of this value also, for upcoming financial years, which I am going to calculate depreciation on this purchased value only. Okay, not on the net book value. Remember, the depreciation for upcoming financial years, the depreciation will be calculated on purchased value, not on the net book value. Remember, so if I am going to calculate net book value, again this into 10%, 9,000 it will come into picture. So we are not going to calculate on this value. So that is the reason we are going to calculate even asset value will be going forward, it will be reduced also. Then we will follow only the straight line method, which I am going to calculate depreciation on it's a acquisition value only, acquisition value or purchased value. Just keep in mind, this is call it as a straight line method. Here is a purchase value. Purchase value, straight line method. Then now, so if you have any further query about this one, please let me know. So the written down value method, I'm going to take the same example here about the written down value method or declining balance method. Okay, many people will say different ways. WDV, written down value method. Let's say I have purchased asset, here is a then make it this one, whatever here. Okay, so this one, let's say in the written down value method, this is my asset purchase value, which I have purchased on 1st of April. Let's say the depreciation value per annum, which I'm going to calculate, is at 10%. Asset lifetime is at 10 years. So here, the first year for 2023-24 financial year, my depreciation value is at 10,000 rupees. Then my net book value is at 90,000 rupees here. Let's say which I want to calculate the depreciation for 2024 and 25 financial year. 25 financial year. What would be my depreciation value here?
On 90,000, sir.
Exactly. So the depreciation value here is a why 90,000 here?
Because we are following the reducing balance method.
Exactly. Yes, 100% true. So now for this written in the written down value method, I'm not going to calculate depreciation on asset purchased value. I'm going to calculate a depreciation on my net present value, net PV. See, this one, the people will say in NBV, net book value, or NPV, net present value also. So now I'm going to calculate a depreciation on this value, not on this, into 10%. Then this is my net book value. Sorry, this is my depreciation value. Let's say for upcoming financial year, for 2025 and 26, okay. So what would be my net book value here? So my net book value would be here 90,000 minus 9,000. So 81,000 will be my net book value for upcoming financial year. Again, I am going to calculate depreciation on this amount, not on this amount. This is the difference between straight line method and declining balance method or written down value method. Okay, So for upcoming financial year, the depreciation will be calculated on NPV, net book value, or it's a NPV, net present value. Not on the purchased value. Purchased value. Remember, this is important for you. Okay. So the only two methods are there in order to calculate your depreciation. One is either you can follow the straight line method or declining balance method. Then the next one is see now, as I mentioned here, for each and every financial year, I want to calculate is a 10% here. Let's say I have 1,000 assets. Okay, some assets which I want to calculate is a 10%. For some of the assets, I want to calculate depreciation 5%. So different percentages according to my requirement or according to the legal requirement. So how system should know on this asset, we need to calculate depreciation 10%. How system should know that one? Then in SAP, in order to calculate depreciations, then we must have to define the depreciation key. The depreciation key, it consists of rate plus method. Rate is nothing but how much depreciation percentage which you are going to calculate. How much depreciation percentage. Then method is nothing but whether you are going to follow straight line method or written down value method. Which method you are going to follow. Under depreciation key, you must have to specify. Okay, so again, the depreciation calculation methods are 5 methods that we will discuss later. Okay, first understand the depreciation key. What is meant by the depreciation key? It's a rate plus method. Then transaction types. You never seen until now about the transaction types here. So the transaction types, the SAP has given different kind of transaction types. The moment when you are posting asset related transactions, these are the transaction types will come into picture. Okay, let's say why we would require the transaction types. Let's say what is the need of the transaction types here. Now let us assume, so my business organization is a car manufacturing company. Let's assume. Then in such situation, my business organization would require there are 10 cars. Okay, they want to purchase 10 cars. But remember, my organization is also manufacturing a cars. At this point of time, the management or the procurement department will do the estimation. What is the requirement first of all? Okay, maybe I would require is a 5-seater, 7-seater. It depends on the requirement. Then exactly the same requirement the organization also fulfilling here. Our organization also manufacturing. In such situation, they will do the estimation. If I purchase the same car from the external market, like, okay, so they want to purchase the asset from other vendor. Then in such situation, which one is a benefit for us? if I purchase the asset, what would be my asset value, total value? Instead of buying external, if I buy the asset within in-house production, then which one is a benefit for me? This is one of the example. So now most of the cases it will be the external only. In case the scenario what I have explained, first they will do the estimation, then they will go for the procurement. Now, so now let's say I want to retire the asset with revenue. So the moment when I want to sell that asset, how I need to identify in the system. Okay, anyhow, the debit credit posting keys are there. How I can identify the asset which is relevant for my external acquisition. So how I can identify my asset retirement with revenue. So there are standard SAP delivered. Let's say asset revaluation. Okay, there are different standard SAP delivered transaction keys are there. Transaction types are there. We must have to specify at the time of transaction, nature of the transaction, we have to specify the transaction keys. But for some other transactions, no need to specify this one. System automatically determine the transaction types based on the nature of the transaction. We will see this one. But for some transactions, we must have to key by manually. We will see that one. Then posting keys. So posting keys are in asset accounting. 70 is the asset debit, 75 is the asset credit. Okay. Then asset debit, when we are going to use the asset debit, the moment when we are going to purchase the asset from the external sources or within the organization, then we are going to debit the asset. Okay, this one is the when we purchase the asset or asset purchases. Instead of purchases, we can use the word is a when we acquire the asset, acquisition, external acquisition, when we acquire the asset, either it should be in-house, I mean internal acquisition or external acquisition. Okay, then we are going to show that as a debit. Okay, when we are going to, then the moment when I am going to sell that asset, okay, let's say I am selling this asset, then sell the asset or transfer of the asset, so different transaction, different nature of the transaction, the asset will be debit and credit. Okay, remember. Then so there are few asset accounting fundamental rules are available. If I explain now also, you may not understand. So that is the reason I am going to explain at the end. So those are the important rules for asset accounting. Okay, so now if you are running asset accounting, they are the 4 basic rules. So there are 4 basic rules that I will explain you later on. Then, okay, so now Now let us discuss about the one by one. So this we have discussed up to the few things here. Let us talk about asset class one by one. Asset class. What is meant by the asset class? We'll discuss one by one. It's a very important topic here. What is meant by the asset class? So the asset class is the classifying of the assets. The asset class is the classification of assets. Classification of assets. For example, in my business organization, I have a different kind of assets. Like land is there, buildings, plant and machinery, furniture, office furniture, I have a computers and software. Okay, then I have a tangible assets. These and all, these are the tangible assets. Let's say I have the intangible assets also, where goodwill, copyrights. Okay, so I have a how I am going to classify my assets. The asset class is going to represent about the your asset classes. Okay, so now while getting the requirement, okay, suppose let's say you will be there in a position, okay, as a FI consultant, then you are there into the implementation project. Then what you need to do, the first thing here, you need to sit with the business people, then you need to get the information what they are having, the existing list of assets. Okay, so you need to go through that existing information, how they have classified the assets. Then you need to propose them. Okay, so now this is your existing list. This will be the current in the future state in SAP. Okay, or else you need to discuss with the business people, then how they would like to classify the assets. Okay, so now this is the asset class is nothing but a, so it's a classification of assets. Then remember, the asset class is defined at client level, not at company code specific. Remember, let's say I have a 10 company codes, then even the 10 company codes are following the different depreciation areas also. One is India, another one Singapore, another one is, let's say, Thailand. Let's say I have defined one asset class is a plant and machinery. In such situation also, I can able to follow, I can use the existing asset class for for all my company codes. Remember, so that is the reason I have mentioned here the asset class is defined at client level. Then the asset class is controlled screen layout of asset master data, number ranges of asset master data, then account determination. Remember, now the asset class, it is going to control screen layout of asset master data. What is meant by screen layout? Let's say I have the asset. I'm just giving the example about the screen layout of asset master data. So I have a vehicle in my organization. Let's say car. I have 100 cars in my business organization. Then, so how can you differentiate between each and every car? There should be some identification. Okay. So here, each and every vehicle is having a dedicated license plate number. Okay. The government issued number, it will be displayed. So based on that, I am going to identify. So for the system, now for vehicles, the number plate or license plate number is a mandatory. The moment when I am creating the asset class as a vehicles, under vehicles, then the license plate number is a mandatory. So in the field status group, I am going to set for vehicles, the license plate number is a mandatory. Then, so this is what the controls, where the controls will be available at asset class level, such controls. Then, number ranges of the asset master. Let's say I am going to create the number ranges for the one asset is a land, another one is a buildings. There are different kind of assets are there, asset classes are there. Based on the asset class, I'm going to create my asset master data. How can I differentiate between the number ranges? Okay, because I'm going to follow for land and for plant and machinery, I want to create assets like 1 to 100. For land and buildings, I want to create 2 to 200. So the number ranges will be assigned into the asset class level. That I will show you maybe. Then show you that one, how that will be there. Okay, since it is S4 HANA, this and all its a configuration is the same. There are no changes here. Let me show you this one as a one example. Then so if I go here, financial accounting, asset accounting, organization structure, asset class here. Now the last one is a defined asset class. See, now I'm going to the, let's say the vehicles. Okay. So for under this vehicles asset class, this is my, okay, we'll talk about account determination later. See now the screen layout rules, what I have explained. Then number ranges here. So the moment when I am going to create asset master data with vehicles, I would require the system need to use these number ranges. Okay, so 0, 0, 1. For other asset class, if I would say here, then I would say for them, see, you can use the same number or you can use multiple number ranges. I mean, different number ranges. But this will be not same. It will be the differ only. Then account determination. So what is mean by the account determination? If you remember, asset accounting also is a subledger concept. Let's say for buildings, for land, For land, there is no depreciation. Okay. So for buildings, plant and machinery, so each and every asset I have classified as a according to my requirement. At the same time, each and every asset related transactions I want to show into different GL accounts. Like let's say land, I want to show in a separate GL account. All my procurements and sales related, whatever it may be. Then for all my plant and machinery related transactions, I want to show in separate GL account. How can I show? So the account determination will be controlled. So what will happen here? The account determination will be assigned to the asset class. Understand the logic here. The account determination will be interlinked to your asset class. With reference to the asset class, we are going to create asset master data. Then in that asset master data, the moment when you are going to use that asset, then this account determination will be already interlinked to your asset class. Based on that, then the system will determine the GL accounts. So the under account determination, the purpose of the account determination, we are going to assign the GL accounts. Remember. So now if you see here, the diagram here, let's say this is my company code. This is my company code. So the company, this is my chart of depreciation. The chart of depreciation is assigned to my company code. Then operational chart of accounts are there. So the operational chart of accounts are assigned to my company code. Then account determination. What will happen here? I have an account determination. So the under account determination, I am going to create the GL accounts. See now I have created GL accounts under my operational chart of accounts. But those GL accounts will be assigned to my account determination. Then what will happen here? It's a company code, operational chart of accounts, then account determination, asset class. See, now you can understand. This is my asset class. Under this asset class, I have assigned the account determination. Then this is my asset class. This is my account determination. This account determination, it consists of my GL accounts. It's under operational chart of accounts. I'm going to create the GL accounts. Then the GL accounts will be created based on my company code level. Then the chart of depreciation will be interlinked to my company code. This is what the process here, if you see. So entire process here. Remember. Then okay. So now account determination here. So that is the reason what we need to define here. How many asset classes would you like to define for your organization? You can define. For screen layout rules of the asset master data. Then I have defined, we must have to define here separately. Then number ranges. Then here, what is the from number and to number for each and every asset master data. Then let us create the assets, account determination here. Okay, so before going to start the configuration, if anyone will have any further query, so please let me know about here. Okay, let's do one thing. So let us go here. I'll make it here is a Z. So all are fine, the asset classification, but capital work in progress will have a separate business process. In interview, there could be a 90% expected question about the capital work in progress. What is the capital work in progress and how the process will be in SAP. So this we would require is a, okay, then I will explain you, because for this one, if I want to explain that process, we would require is a CO integration, because we would require is a internal orders. So at this moment, I have not yet created any internal orders. So once the CO integration will be happen, we'll discuss about the capital work in progress. Okay. So the capital work in progress we'll discuss about when we do the configuration of the controlling. Then okay, fine. Configuration. Financial accounting, asset accounting. Then what we need to do? First, we need to, as part of the configuration. Okay. So what we need to do? First, we need to copy the basic settings. Let's say, so we will do the configuration of the asset classes and all this. Okay. So before going to define that one, there are few basic setup. So there are few basic configuration settings to be required. Then this I have already explained about the depreciation posting. Then what is the base configuration? Base configuration for asset account. Okay, baseline configuration for asset accounting. So there are few customization settings to be required here. Then number one is a copy reference chart of depreciation. As I have explained here, I must have to copy the chart of depreciation which SAP has been provided. Okay, so now I'm just copying here. Then copy reference chart of depreciation. Just click on the first one, copy reference chart of depreciation. Go to organization object. Then click on the copy organization object here. So now let's identify depreciation because our company code, which is located in Singapore, right? Let's see that ESG. Where is that? Even I don't remember that. Singapore here, if you see 1SG, I'm just using this one. Then just give your company code in order to identification. Continue. Continue. Continue here. Chart of depreciation 1 SG copied to Z0 SG. Remember. Then come back. Then see, I just have copied the depreciation, chart of depreciation. How system should know this chart of depreciation to be used for my company code. So the next step would be a assign chart of depreciation to company code. The next one is that assign chart of depreciation to company code. Then Z0 SG. So the same depreciation Z0 SG. See now. So now I just have assigned a depreciation area chart of depreciation to my company code. See now there is some error. See the long text here. This it's a non-error only. Okay. Financial global parameters are missing. Show the important global parameters are missing for the asset accounting. Okay. I will do this configuration here. Then create a session. OOB Y6 are the global parameters here. Okay, system is telling it's locked by someone. I only locked here. Go to the Z0 SG here. Then company code is a productive. Then proposed financial year, negative postings, tax based net value, discount based, country specific chart of accounts not required here. This I just have already saved this one. Let's see. Okay, so now here before going to do this one, let's say copy check delete depreciation areas. Let's see in my company code. See for my company code, I have a different depreciation areas 1, 15, 18, 20 to 51. Okay, as per my requirement, I would require only these two. I would require only these two. Others I do not want. So unwanted depreciation areas you can delete from here. Deleted other depreciation areas. See now all should be green state, should not have any error. Then I'll put it here is a book depreciation. Then this is for the IT depreciation. IT depreciation. So this is my book depreciation. This is the income tax depreciation. So I would require is a two depreciation areas here. So if there is any country specific requirement, you can do it. You can have a number of depreciation areas. Then to copy. Then under the same configuration only, then assign chart of depreciation to company code. Let me come back here. Still giving some warning message. What is this? Let's see. The result of checking company code showing important global settings for the financial accounting is missing asset accounting. Currency chart of accounts physical year. You cannot have this information. With a long text. Shows that impact global parameters. So this one, I remember this one, we must have to do the configuration for the input and output taxes. Let's see this one. Assign chart of depreciation to company code. Let's see OBCL. I think this is the one only, the configuration. I'll explain you. What is about this? T0 input, then A0. Let me go this one. Let me try now this one. See now. Now the warning, now even though that warning message which is not appearing. The reason being that when I am going to use this asset, the company code. For this company code, input and output tax codes. So the moment when I'm going to procure the asset, then the tax system would require is a tax codes here. Default tax codes here. See now what I have given here is the 00. So G0, if you look at G0 here is my tax is I do not want any tax calculations, any per tax percentage. You can assign anything here, but that will be defaulted. For input is a 0. For output also I have assigned as a 0 here. So the moment this is the mandatory step, as soon as once you perform this one only, then see non-taxable transactions. Allocate company code for non-taxable transaction. I'll put it here. This one is the second step. Insert. Allocate company code for non or non-taxable transactions. I'll put it here is the OBXL is the transaction code. Okay, then assign chart of depreciation to company code. This is the OA, OB. Then copy reference chart of depreciation is a EC08 transaction code. Then now the system is allowing me to assign this one. See, now the data is been saved here. Then okay, so now before going to creation of the account determination, see, now before going to create the asset class here, if you see, first I would require is a asset class. Okay, I would require is a what I would require is a account determination, screen layout rules, which if I want to define, then asset class from the GL account specify the required entries. This is not the one. Copy class requirement, organization structure. Then here, if I come to the organization structure, asset class. See, now if you see here, specify account determination, creation of screen layout rules, define number range intervals. Once these three things will be ready, then you can create asset class here. Okay, we need to discuss all these things. We will continue the configuration in tomorrow's session. Stopping that one moment.